Alright folks, welcome back. Just as a reminder, did not put a video up on Thursday. I was going through some data looking at the ridiculous spending spree the US government's currently under. So we're looking at the dollar index here. Okay, so obviously we didn't get any deeper run above the high here. Didn't find any support at the old premium high, the volume balance, or the discount low. Now I'm doing this video rather early because I don't think anything's going to really change between now and when we trade on Monday, because the uncertainty of Sunday's opening is always with us. So the bulk of today's volume, I think, is already in place. So does dollar come down into this order block here? Notice I'm skipping over this small little body candle, indecisive candle. I'm looking at this one right here. So it could trade all the way back down into this candle here. So around the 92.25 level, we'll call it. That allows for higher prices potentially on euro and cable. Hourly chart on the dollar index. We trade a little bit into the sell side imbalance, buy side inefficiency. Consolidated, displacement. We're inside of this buy side imbalance, sell side inefficiency. But I think if it's going to come lower, think about it like right in here, or revisiting this imbalance. We've already seen it come down in, but it might want to come back down into that again. So like I said, around that 92.25, 92.30-ish, in that vicinity. And the 15-minute time frame on dollar index, you can see we had small little Judas swing in here, and just a heaviness all throughout the entire session on Friday. Not just simply running below for liquidity's sake, it's just completely melting. So I don't think that anything looks terribly bullish for dollar right now, and with everything that's been going on with our government and its spending, it doesn't bode well for it in that regard either. Euro dollar daily chart. Okay, you can see we had a nice explosive price action move intraday here on Friday. Didn't get down below this low and still has not yet worried about this sell side liquidity. So now we're at that point where let's assume that the dollar index goes down to the levels I outlined where the bullish order block would be. Okay, the dollar index can trade down to its bullish order block I outlined. The algorithm should capitalize there and trade for its relative equal highs on its hourly and daily. If it doesn't, and we trade higher than the rejection block here, then I have abandoned this for the month of August. Retracement back up into the sell side imbalance, buy side inefficiency, it's reasonable. Trading above the sell side imbalance, buy side inefficiency, and above the rejection block and still being bearish for this, not likely. It would require something else later on, another breakdown, and then revisiting something that would be bearish after that. But in here, this is still something that could still work with a run that goes below here, because we have relative equal lows. They're building in my mind, they're building in support to trust, building in sell stops here and or sell stops here, and large fund traders keeping their sell stop right there. So if it runs up and fails and the dollar index picks up its bullish order block and starts capitalizing a bullish run, then this is just manipulation on the near term. The only problem with that is that 1.2 trillion or whatever it was spending bill, which it's garbage. That, in my mind, the Fed will work with that for sentiment reasons. We're going to go into the lower time frame and look at all of this here, but for now, just keep in mind that the rejection block or higher nullifies this right here. All right, on the Euro hourly chart, you can see we have a consecutive down close candles. That's your bullish order block. Small little fair value gap in here. And price rallied up. I want you to go into your notes from Wednesday's video. That was the last video I put up, again, because I didn't put up one for Thursday. I mentioned on Euro, there's certain scenarios I would like to see. And I want to go into that now. Let's look at the 15-minute time frame. And this is a naked chart. And when we were discussing, or when I was discussing rather, the euro dollar, I stated that I'd like to see this high, see this higher high, and then one more attempt on the cable market or pound dollar. But I did not want to see it. Okay, I did not want to see it on euro. I wanted to see this high stay in place. If that stays that way, and we come back down into here, this might be a reason for the price to go higher. But the circumstance that would allow for that would be not taking out this short-term high. Okay, so not taking out this short-term high on euro and then trading back down in to here indicates that they left buy side liquidity here and they're going to come back down for a discount and then capitalize and send it back higher, as I mentioned in the video. And I think if I'm correct, my notes say around the 6-minute mark of Wednesday's video, so you're welcome to go back and watch that. But just for completeness sake and continuity, watch the entire video again, okay? Because you get to see exactly why I stated in that video that August is generally a month that I'm not interested in, because I'm classically wrong a lot in the month of August because there's a lot of manipulation, there's a lot of summer volume. It's just, when I say a lot of summer volume, it doesn't imply lots of volume. It just means that there's the effects or impacts of the lower volume associated with August trading. The takeaway is that if we would have ran up one more time on euro and then came back down to here, I wouldn't expect that to be bullish. Okay, in other words, this buy side and balance, sell side efficiency. If it took one more run higher than this, in other words, it cut 1, 2, 3 drives higher and then broke down to go into here, that to me is not bullish. But I mentioned around the 6-minute mark or so, going forward on euro from Wednesday's video, if we have this high, and do not run this high out with a higher high, and then we trade down here, be careful, because that would set up the conditions that would send it back up above this high here, complete the fair value gap on end. We've seen it really start to tear off even higher than that. So let's take a look at why I felt that way. This is your hourly bullish order block, as I mentioned before we went into this naked chart on the 15-minute time frame. So here's your bullish order block. And if we go into more detail, there's your buy side and balance, sell side and efficiency, consequent encroachment. The price is 117.23 and 9 pipettes. Okay, so it can trade down into that and pick up more buyers. Not that buyers are causing it to go up, but it's going down there to pick up interbank traders that want to trade long in here. There's that bullish order block level. You can see it trades into that on Thursday. And here's the fair value gap, premium high, discount low, consequent encroachment. Look at your candle right there. On your time frame, 15-minute, euro dollar for forex.com, you'll see that that low is exactly 117.23 and 9 pipettes. This is what I was warning you about if we didn't make the higher high. Now, did I anticipate all of this run here? No. I felt that if we went down here, it could see it go back above this high here and complete the fair value gap. This was something that was unexpected by me. Okay, so again, I mentioned this in Wednesday's video. I don't look at this and say, oh, I wish I would have. No, I just know that this is synonymous with August trading. Sometimes it's hit and miss. Sometimes there will be these moves here. But I outlined something that would lead to bullishness and characterized what wouldn't lead to a significant return back to this and what would indicate bearishness. If we make a higher high here and we trade down, then this is not bullish. And the reason why is because we had 1, 2, and a hypothetical higher high that did not form, but let's assume that it did. By doing that, it's taken out one level of buy-side liquidity, 2 levels of buy-side liquidity, and then coming back down for a discount. That's generally not what the algorithm does. It's not likely to do those types of things. But leaving 1, 2, and then rolling down into it like we do here, picking up orders there, then that's probably going to be sending it higher here. And I was anticipating it was going to run up into that on Thursday, and then if it did, I could have worked on something that may or may not have pointed to some part of this. But I'm not here to try to say I would have or could have. I'm just implying that how I would have worked with that information had it done it. It didn't do it. Okay, so we came down into the buy-side imbalance, sell-side inefficiency, hit the consequent encouragement, and then consolidated. And then today we had a small little Judas swing after midnight, and out the races it went. Missed opportunity, I'm not concerned about it. You shouldn't be concerned about it either. It's in about 80 pips or so. It's not even a full penny move, so it is what it is. Strike it up as experience, and nothing lost, nothing gained. Pound dollar. All right, this thing is doing whatever it wants to do. But I mentioned we would be trading like this while we're in between 139.50 and the order block in here. So this to me is just one more indication that I'm doing the right thing by not wanting to touch it, because it's back and forth. The last 3 days we've been in a range of about 80 pips or so, 90 pips of back and forth price action. That's not something I want to work with. I don't like to trade in those environments. And again, it's not showing us definitively that it wants to go for this or this. Okay, the rejection block in this high or the bullish order block here. It doesn't show any willingness to show where it wants to go, which is the reason why I was stating on Wednesday that it's indecisive and it's 50-50 gambling. And I'm not in the business of gambling. So let's drop down to lower time frames. You can see we were trading in here. I mentioned how I wanted to see it trade higher, create a higher high, and then consolidate, and then let Eurodollar traders think it was going to do the same thing, but don't do it, and then see Eurodollar trade lower. Did not get that right at all. And again, let that underscore why I'm telling you I keep a hands-off approach to August generally, because I understand where my weaknesses are. I don't have the trust in looking at the things I'm looking for in price in the month of August, because there's a lot of just stagnant price action where it's not wanting to do much, or moves will be very surprising that I may not be anticipating. So to alleviate that frustration, because I have obsessive compulsive disorder, I just simply highlighted that this is a month, historically over my long career, I usually get it wrong. Just like in January, it's the beginning of the year. There's factors that are being put in play at the beginning of the year and or attacking the previous year's sentiment. And I want that initial noise to be in the marketplace before I engage. That way, I look at January kind of like the accumulation phase of the first half of the year. Here, we did not get a higher high. We just consolidated and then fell out of bed. So I didn't expect to see this run here, below that low here on Wednesday's video. So all of this was surprising to me. And if you remember, I mentioned that all the signatures I was anticipating and looking for between euro dollar and pound dollar, I was expecting the euro pound to drop as a result of what I was outlining there. And everything was absolutely backwards. So it's like I was retail. an ICT retail moment where it did the opposite of what I was expecting in every aspect, except for the one redeeming quality of the euro dollar going down to that fair value gap. That to me would be concerning. That, I guess, in a little small, little simple way of, referring to it, that's good. But I don't want you to think of that as me trying to put lipstick on a pig here, because this underscores, again, this really puts a spotlight on why I'm teaching you to be not fearful, but to be aware of the sentiment and the historical price action that's associated with August trading. Every year, it can be frustrating if you're trying to be here on every single move, and or it can be frustrating if you need to be in there, just because you want to be trading, and you want to be indifferent. Just say, well, I'm going to observe what happens in August, but I'm not going to be trying to press the button so much. Okay. And if you've been demo trading or paper trading and you've gotten smacked around in your demo account so far for the month of August, let that be a lesson to underscore why you shouldn't be going forward in the coming years, pushing your luck in this month either. Because believe me, if there wasn't something to what I'm suggesting here, I wouldn't live by it. I wouldn't be making it a part of the mentorship, and it wasn't the only time I mentioned it. So anyway, all of this here, did not see it coming. Completely surprised by that run here, and then one more time went lower and then marked back up here. So it's just like a free-for-all. They're taking it wherever they want to go, and I'm not going to trade in this environment. Okay, I can honestly tell you that I would have not have bought below this low, and I would not have bought below that low. I wouldn't be a part of it. I wouldn't have shorted up here. So it's honesty, folks. I'm trying to tell you what it is I focus on, and I'm trying to do my best to show you what I'm avoiding, so that way I don't fall victim. Because if I would have been trading, okay, I would have taken a loss, maybe 2 losses. Okay, if I was really trying to push the envelope, trading maybe, Thursday's London Open or Thursday's New York session, I probably may have taken a loss on both fronts. And today would have been like insult to injury, because it would have been flying against what I was expecting on Wednesday's analysis. So it helps me manage, and I'm not suggesting at all that you're going to always avoid these instances where you're going to lose money. You're going to lose money. You're going to lose trades. And that's what I'm trying to get at here, because even though your analysis, just like my analysis, was wrong on Wednesday, it can be wrong. It can pinch your ego and your pride if you're a male. Women don't tend to have that problem. But you also learn to accept the fact that, okay, my analysis was off here. And was it attributed to you being a poor trader or me being a poor analyst? No. It just means that I'm talking to you. I'm giving you opinions about what I think may be there. But I'm also telling you, I'm not personally doing anything with this month, but I have to, because I feel obligated to talk to you every single week about what I think is going to happen. And I don't want to take the whole month of August off, because, again, you're looking for conditioning and training. This is proper conditioning and training. You're seeing why I am against trading in August, because this shows an underlying weakness in my own analysis. So therefore, it's in alignment with what I'm teaching you, and why it's, well, worth mentioning that I'm not interested in trading August. So in other words, contrast what I'm teaching you and how I'm teaching you with another teacher or trader. Okay, they may be out there being profitable. They may have taken some of these trades and may have been profitable. Consistently, years in advance, they're not going to have that consistency in this month. It's just historically a squirrely little month. I'm not trying to say they're less of a trader, or I'm better than a trader than they are, because, or vice versa, because they've maybe taken a trade in here. And I don't know anybody off the top of my head that were making any of these trades, but let's assume that there's 2 or 3 of them out there. They would be out there beating their chest, saying, we're killing it, we're teaching you how to do it. I'm teaching you how to be sober-minded. And how I'm teaching you the pitfalls and the areas in my own trading that are problematic, I'm not hiding them from you. I'm showing you exactly where these problem areas are. That is mentorship. It's not enough to say, here's how you make money in trading and this is how you read price. And then assume, because I taught you that you're never going to have losses, that you're going to walk through this with no hardships or adversities, because you are going to have adversities. But you're really going to have adversities in the months I'm telling you I stay out of it. So you're seeing it. You're getting a real feel for what it is that makes me so opinionated about not being aggressive in the month of August. So I'm practicing what I'm preaching, and you're also seeing the reasons why. Because I can literally be 180 degrees off of what the market's going to do. And to avoid that frustration in my own trading and losses, because that's what it would really result in, I just simply just let the month do what it wants to do. And I get prepared for the months of September, October, and November. So you can't ask for a better lesson, even though it's probably not a lesson that a newer student would want to see. They want to see their hero, their teacher, their sensei come out here and break 20 bricks on every trading day of August. That's not practical. I'm a realist. Okay, I'm not going to get out here and tell you I can do something I can't do. And I'm going to tell you there are times when I can't do something. And this is historically, going through the mentorship, you're going to see that this is how it is. So next August when we're talking, just don't plan on watching the videos daily. Because right now, the 2021 group, I'm sure they're in there trying to get a video every single day. And, oh, you didn't give me a video Thursday. Oh, I'm mad. I'm upset. Maybe I'm going to send you an email. You're not obligated to get a video from me. Even though I said on Wednesday, I'll talk to you tomorrow. I didn't. And here it is. It's Friday. And I'm showing you what it is that I was off on Wednesday. The one thing I had right, but everything else was absolutely wrong. So I want you to know that there's proof that I can be wrong, that I can absolutely get it wrong. And I knew in advance that this is probably going to be something that's wrong. And this month is historically, over almost the last 30 years, this is a month where I get slapped around. When I was really pushing it, this is a month I got hurt in. So take it for what it's worth. Don't try to be the guy that, or the gal that comes in here and fixes the problem I have with August. Just respect it. Respect the measure of risk and the market activity that usually comes along with this month, because it can be consolidation, whipsaw, just not trying to get anywhere in a hurry. And then finally, the 15-minute time frame for the British pound versus US dollar. Looking at these highs here, they to me look suspect. They might want to reach up into that, maybe trade up into the 139 big figure. It's been called on Wednesday's video range between 139.50 and the order block on the daily chart. So that would still be within the range I was referring to on Wednesday's video. Lots of movement in here on a 15-minute time frame, but I can honestly tell you, because of the historical results I've had in months of August, I wouldn't be in any of this. I wouldn't do it. I just know that I can't trust the market to deliver what I'm looking for in this climate. Not just this climate at present in 2021, but historically in the month of August, the doldrums of summer and the low interbank flows. Now, there are increased interbank flows because I think there's a lot of things being shifted around because they know how our government in the U.S. is trying to spend money. That's going to cause all kinds of fluctuations in the coming months and year in Forex, which is exactly what we want. Like, I don't care personally, what this government does, because I'm hedging the best I can, and I'm not going to lose any sleep over it. If they bankrupt the country, can I do anything about it? No. I'm not going to be able to do anything about it. If they mess around and try to raise taxes, to astronomical levels, that's fine. I can outpace any rate hike on their tax programs that they want to put on people like myself. Okay, I don't care. They're talking about they're going to tax the rich. Okay, well, rich people have ways of making money, and they didn't get there because they're stupid. They got there because they know how to maneuver around all of what the government's trying to do within the law. So I'm pretty good with math. I'm pretty good with money. Couple that together, compound interest and submitting to time. I don't care what they raise the tax bracket up to. Okay, I don't care. You shouldn't care either. what is concerning is if they do so much damage, and that's what they're doing here, and it might be painful to hear me say that because you might be in alignment with this present government, but what they're doing is really harming the underlying economy of the U.S. And if they keep doing things like this, and if they keep trying to pass what they're wanting to do with the other trillions of dollars they're trying to push in, that is going to really, really screw things up in the U.S. for a long time. That in itself creates Jimmy Carter-like trading. Okay, and while I wasn't trading during the Jimmy Carter era, that president caused all kinds of wild fluctuations in the commodity markets. Okay, so like I said, I facetiously mentioned and joked around when I was on YouTube years ago that I would love for Jimmy Carter to come back in office, just because his policies, drove the markets nuts. And there's lots of opportunity. And they could do all kinds of things. Back then they had, mortgages for like 12 and 16%. Think about that. 12 and 16% interest on a home mortgage. Now granted, the houses were like nothing, $60,000. But the effects of what was being pushed through the markets, or in those times of his presidency, caused the commodity markets to go absolutely bonkers. And that's what we're expecting anyway. We're expecting big moves in the commodity markets in 2022. Food shortages, just weaponized war on people being able to obtain at a realistic and affordable price for food. And living expenses are going to go through the roof. So for the average person, it's going to suck. It's going to be very, very bad. But for some of you here in this mentorship, you're learning how to take advantage of that. I don't want to see these bad things happen, so I don't want anybody to take this out of context and say, listen to this guy, he's a warmonger, he wants people to be thrown in the street and homeless and not being able to afford it. And that's not what I'm saying here. But I also stated earlier in the video that I can't personally stop any of that. I can't do that. I can't stop it. They're going to spend, they're going to spend. The only thing I can do is identify the opportunity. And that was the only real benefit of the Ken Roberts book that I purchased and mentioned when I discussed, that influence that Goober had on me. The whole idea of seeing opportunity in things that are not necessarily a positive, like a drought, okay, like a economic shutdown and causing the oil market to collapse, okay, to historic levels that nobody's ever seen in their lifetime. Those bad periods, okay, or moments in time, those are the very things that a commodity trader prays for. They want to see stuff like that because they can turn that very painful, uncomfortable circumstance into fortunes, which allows them to live comfortably through that rough period. And in the near-term future, they can weather a lot of that type of event. So I'm not trying to make you callous as a person. I'm not trying to inspire you to hate people so much or wish bad things on everybody in society. But I don't fear all these things. Like, I don't look at things and say, oh, I hope this doesn't happen. I'm going to be scared about this. I used to. As a young man, I used to. It was a mess. Like, it would pull at my heartstrings and I'd have panic attacks about certain things. And September 11th was one of them. But September 11th also taught me that this whole world is being plunged into some drama theater that none of us are going to be able to control. But these things that they do create opportunities for them. Now, I'm not trying to join in their ideology. I don't share in their views of how people should be forced and placed into slavery, because that's really what their agenda is. I think that if they're setting the table for themselves to win, I've learned how to identify their marching orders. I guess basically that's what I'm getting at. And I just want to sit back and wait for those opportunities to join in on them. They're not going to be back and forth, stopping lots of people out, in a big move. You might see one stop rate and then the thing just starts taking off. In environments like this, it creates wonderful, wonderful periods of chaos. And in that chaos, opportunity is birthed. And that opportunity can birth millionaires. And that's really what I'm trying to get your perspective to get in alignment with. Not to be fearful. Don't hear me saying, oh, we're going to have food shortages. There's going to be people, in the street busting your head in because they want what you have. Identify that as a potential threat and make concession for it. Do what you have to do to get prepared for that. Buy extra food, get home supplies, because things like that are coming. But by the fact of those things being present in the future, near term, they in itself will create chaos in the markets, which creates opportunity. So while everyone else is going to be panicking because they can't get food, they can't get medicine, they can't get services because they don't have the vaccine passport, which I don't care about because I can have food delivered to my house, or I'll pay somebody that has a vaccine. I ain't got to do none of their stuff. I'm not jumping through their hoops, okay? I'm not going to be worrying about all the things that everyone else outside this mentorship may be worrying about, because you're learning a mindset. You're learning to think differently. You don't look at things as something that's going to attack you and be fearful and harm you. You're looking at, okay, this is a rough road. I'm going to slow down my pace so that way I can observe more and I can navigate. If you're looking at a storm, okay, and you're driving down the road and you see a twister, 2 miles down the road, and it's throwing trees around all over the place, are you going to speed up towards it? No. You're going to slow down because you want to get the lay of the land. Figure, okay, is this thing coming right at me? Is it moving away? You're not going to go straight ahead, but you're going to observe and slow down so that way you can get a clear view of where you are. This is what this mentorship does. It gives you a perspective on knowing how to navigate, and also when, hopefully, to avoid the real problem areas. But also identify periods of chaos as opportunity and not fear them for the sake of what they are. Droughts, oh, it's terrible. We're all going to starve. No. There's going to be food shortages. Yes, it's going to be hard to get some things, but there will be food. Will there be periods where people go in the stores and loot and make it difficult for anything to be purchased? Yes. That's why I'm telling you to stock up. That's why I'm telling you. I'm not saying that everybody's going to be forced in their house to stay there and starve. I'm saying that you need to prepare. So that way you're not going to be distracted by worrying about that and miss the opportunities that's going to be coming in the coming year or months. Okay, so hopefully that's answered the question I received in regards to why I'm even talking about all this stuff and why does it make its way into the mentorship, because I'm not going to address it again. I'm still going to talk about these things. I'm still going to be opinionated about why I'm thinking the way I'm thinking, because that's what you paid for. You want to know how I'm thinking, and you have to have the burden of filtering out what you don't like about it. I'm not going to filter what it is I am doing. So, like I said, I'm a realist, and I already know that I'm not going to jive with everyone's political view. I'm not going to jive with everyone's spiritual view and personality. I'm probably going to get a lot of you that at the end of this mentorship, when I'm done and I say no more, this is it, have a good life, I'm still going to get people say, this sucked. It wasn't as good as I wanted it to be. It's going to happen. Other people, if I stopped right now, they're satisfied. They got everything they wanted and more. But I want you all to have every advantage and also observe and understand where the disadvantages reside. And you got a taste of that with Wednesday's analysis. The things I was saying, absolutely the other way. I couldn't have been more wrong in most of what I said on Wednesday. So again, that just really puts a little push pin on the whole reason why I treat August the way I do. And I'm not trying to go in here and improve ICT by figuring out August. I know there's enough weeks in the year outside of this month, December and January, and the latter portion of November, that I can do wizardry there and not really worry about it. So hopefully that gives you a little bit of inspiration and removes some of the sting if you've had some issues in August and felt like it wasn't working for you. That's good. That's a good observation to have. And now you see that your teacher will get it wrong. Okay, I'm not saying I won't get it wrong in other months where I'm going to be a traitor and trying to push the envelope, but by far and large, I'm more apt to be incorrect in my analysis in this month because the market just simply will not be willing to submit to the things I'm used to looking for. Like I said, there won't be a video on Sundays because we're in the summer months and kids are out of school, so I'm trying to use that weekend time to be with my family. So this is the weekend commentary. This is the weekend video you would normally get on Sunday. And I will touch base with you next week. Until then, be safe.